Hello and welcome. I'm Janne Muta, the Chief Market Analyst for TIOmarkets. Today we'll again take a look at some interesting markets, but the focus must be on USDJPY, as the Japanese government is considering additional stimulus measures and the pair is bouncing higher from our confluence zone. The release of the FOMC minutes later on today could play a key role in this and many other markets, from equities to commodities and the forex. So watch this video to understand the recent price action and to see where the key price levels are. Watch this video only if you agree with this disclaimer and with the fact that we don't provide any investment advice. We started focusing on USDJPY last week. This is from the video a week ago. And the reason was that there was a new story that the Japanese government is considering new stimulus, and obviously that's always significant. But in this context where the Fed is getting more hawkish, it's even more important. And that's why the market had rallied by the time of our video to the upper end of this price channel. So I gave you a couple of levels. I gave you this minor support here and this confluence area here where several things came together. There was 23.6 Fibonacci retracement, the channel low, the 20-day moving average, and this swing low here. So all of these things together caused me to suggest that if the price comes down here, I'm fairly confident that buyers will come in and start to bid USDJPY higher. And this is actually what happened. The market came through, it didn't care about this level here, moved down to our confluence zone, and then the buying started. So if we now get a close above the open, then there's a quite good chance that the market will go higher. Why? You might ask why. The answer is really because we have a trend higher. That's the simplest answer. But we also have the market, we have the fundamentals backing up this trend. We have the Fed getting more hawkish, and at the same time we have the Japanese government getting a little bit more dovish. So that sort of should keep the bidders in this market. So if this market closes higher today, we obviously get the FOMC meeting minutes today, and the traders will want to know if there was something more details in terms of details on what might be the Fed doing in the future, if Fed's going to raise rates sooner or later. So obviously all those things play into this market as well, and that's why we need risk management. Nothing is given in the markets. We never know beforehand what's going to happen, so that's why we need to play with small positions and always have a protective stop in place. But let's assume that the minutes are still bullish and the market moves higher. So then the question is how far the market might move to. And I think this recent high at 111.65 or somewhere close nearby is a level that is quite reasonable as a target on the long side. But obviously we need to consider the bearish option also. So if the market just keeps on going lower for any reason, then I think once it breaks this channel low, then it has moved below the supporting zone. And then it's more likely to move down to the next important area, which is where we have the 50 period moving average, and we have also the 50% retracement level. So the actual levels here, or the numbers, it's about 109.57 to 109.77. That's where the range is. So I think that's a likely move if this support is broken. So that's a likely target on the downside. Hey, if you want to know how to better use my analysis in your trading, come to the next webinar. Go to TIOmarkets.com/webinars and make sure you have registered a seat for yourself. It's a free event. I'm there to help you. I'm there to answer all your trading questions. I show you how to place trades, how to set the targets and stops, and any other stuff that you might be interested in. Let's meet there in about 6 days time. I look forward to seeing you there. So welcome, warmly welcome. Gold has been quite interesting lately. In June 14th, we said that there's weakness in the price of gold and it might reverse lower. And this is indeed what happened. The market really plummeted quite sharply and then started to create this bullish wedge. Now the market has broken out of the wedge and moved roughly the width of the formation because the yields in the US Treasuries have been going lower. The price has been gold has been moving higher. Now we have the FOMC minutes coming out today. We don't know beforehand if they're going to be hawkish or less hawkish. We don't know how the markets are exactly going to react, but what we can do is to map out the market, see where the key levels are so that we are better prepared to trade the price action after we have the information, after we know how hawkish the minutes are. So basically the idea is that if we get a hawkish minutes released today, then the yields are likely to go up and the gold down. In the case of less hawkish minutes, the yields go down and gold goes higher. So the key levels are obviously yesterday's high at 14.15. And if the market rallies further, then we have the 50% Fibonacci retracement there and the 50-day moving average. These are coinciding roughly around 1834.90, so roughly there. Then the next interesting zone is rather close to this one, so that's the 61.8 Fibonacci retracement, and this historical level that used to resist the price moves, and then it was support here on this one candle. So I'm using those two technical factors to create a zone here, a confluence zone, and I'm going to give you the numbers here. So 44.35 roughly to 18.53.60. So that's the zone there. If the market moves lower, then I think we have this downward sloping formation top here, and we have this low, which is the low that attracted buying here. So that was 1750.70. So these are the key levels. If the price moves down, maybe somewhere down here we get a reaction. Maybe the price goes all the way down. Who knows? We don't know the future, so we just trade the price action around these levels. Gold moves pretty much intraday, so there's always opportunities if you know what to look for. Let's take a look at Tesla next. In May, we pointed out that there's buying happening in this stock and it could move all the way to 694. Now the stock hits 697.60 and started to struggle. Anyway, the point is that this gave a pretty good gain opportunity, a good opportunity to gain about 17% before any leverage. So that was a really spot on analysis there. And as you can see, this was a spot on target also, because now the institutional selling started around the same levels and the price of Tesla has moved lower. So the key levels now are down here. Obviously we have a confluence zone here. We have both the moving averages, we have this recent resistance, and we have the channel low. All of these factors coinciding inside this zone. So roughly from 622 to 641, we believe that there's a good chance that the buyers will re-emerge in this market. If not, then we have to see if the market will move all the way down to these recent lows, because that would obviously mean that the price just plummets through the support, and after it's below the supporting trend line, then it could go all the way down to these levels down here. So that would mean about 578 to 543 zone. So So that's obviously the bearish scenario. But if we get the buyers stepping in and we have a bounce from these level higher, then there's a good bounce probably to the recent levels to this sideways move here. That would be, in percentage terms, that would be about 6.3%. If we get a move to the channel high, that would be about 12% move. So let's see how it goes. As usual, we don't know the future beforehand, but that's quite okay, because as long as we know where the key levels are and where the price might move after bounces or breaking the levels, then we are pretty much ahead of the game when we compare ourselves to others. So thank you for your time, and hopefully this was helpful. I hope this video was helpful. If you have any questions regarding trading or the markets, let us know. Leave us a comment, leave us a question. We are more than happy to help you out there. And also, maybe you can subscribe to the channel and tell your friends that there is good stuff available for free. That would be really, really highly appreciated. So thank you for your time. Trade safe and never trade without stops. See you soon. Cheers. Bye-bye.